All right, welcome everyone. I'm Christine Tobin, Chief Operating Officer for Young Investor Society, and I will be your host today. I'm super excited for you guys to join us on our first female panel, Fireside Chat. So thank you for coming and being here. I'm going to go ahead and get started with our first guest speaker. Our first guest speaker is Vielcka Mansukhani. She's the head of North America Equity Sales and Latin America Institutional Equity Sales at Brandesco. She's been focused on Latin American public equity markets in the equity sales capacity for 18 years, the last 10 of which has been spent at Brandesco. Before Brandesco, Vielcka was at Brazil Plural, a Bank of America Merrill Lynch, respectively. Vielcka began her career as an analyst in the investment banking division of JP Morgan and Company. She received an MBA from the Tuck School of Business at Dartmouth College, a Bachelor of Arts in International Relations from Wellesley College. Vielcka is a native Spanish speaker who grew up in New York City and still lives there today. And most importantly, she's also part of Younger Investor Society as a YIS board member, and she's been instrumental in able to plan YIS programs and events for the past few years. So I am going to give it over to Vielcka to go ahead and give you a little bit of her story.
Well, thank you so much, Christine. Thanks to all of you for joining. I would like to start off by saying that YIS is very near and dear to my heart. I strongly, believe that education can change lives, and I think financial literacy is perhaps one of the most, impactful way to drive that change. And like Christine was saying, I joined the board about 3 years ago. I think the mission really resonated with me, being able to teach students of all backgrounds about about finance and long-term investing skills that are going to help them, over their lifetimes, was something that, I was excited about. So, and continue to be excited about. I will say that over the years, I've been consistently really inspired by YIS students, and what they learn in the program over the course of the year, and what they produce for the stock pitch competition each year is really impressive. So, kudos to you guys for all of that. So in terms of a little quick background on myself, I grew up in New York City. I'm the child of 2 immigrants. My dad was from India. My mom is from Ecuador. While neither of them went to college, they really valued education, and really focused on that and tried to do what they could to help us succeed. But in their minds, success was, becoming a doctor or a lawyer. So a career in finance or, on Wall Street wasn't really something that they understood or knew all that much about. And so you guys are way ahead of me where I was in high school, because I had no understanding of financial markets at all, or anything that you guys have been learning. So kudos to you guys. So I did end up going to Wellesley College. I majored in international relations, minored in economics, but I really wasn't sure what I wanted to do. I thought, I might be a lawyer. I was also interested in economic development, so I thought maybe I'd work at a think tank or, NGO. But I think one of the great things about, going to college is really all the different perspectives that you get, and you learn so much. And I was really fortunate to interact with a lot of alums that came on campus to tell their story from time to time, and tell us about their career trajectories. And what the alums that I was most whose experiences I was most drawn to and most interested in ended up being those women with careers on Wall Street. And many of them worked at investment banks, and they really demystified the various career paths in finance for me. And I think, the common thread was, that they were focused on understanding markets and companies, and they talked about their work on IPOs and M&A transactions, and helping to assess, what companies were worth by analyzing them and forecasting their, growth prospects. They looked at the best capital structures recommended to companies, and sometimes the shareholders, what they should do with the company, whether it's, stay standalone or merge. And, all of that sounded super exciting to me. And so, I decided that that was probably a good place to start. And so I started off my career as an investment banking analyst at JP Morgan in their training class. I was there for 2 years and did, energy banking, then moved to do Latin American real estate banking. After that, after those 2 years, moved over to do private equity for a Latin American focused fund, and decided it was also a good idea to go to business school. So I went to Tuck, like Christine mentioned. I did private equity again for another year, but after that decided to pivot to public equity markets. I'd always been interested, but sometimes you just go down one path and just keep going, which was mostly focused on the private side, but then decided to pivot and do institutional equity sales at Merrill Lynch. And I've been really in that role since, 06 at various different firms. But basically what we do is help our institutional clients, of which Sara is one, keep abreast of our firm's latest thinking on markets and companies, helping them assess those risks, pitch high conviction ideas when we have them. And, it's a really fun job because you get to discuss what drives markets, companies, what I really like about public markets is that there's a lot of transparency. I think with private equity, sometimes you have something on your books or in your portfolio at a certain price, but you don't really know what it's worth until you try to sell it. And then, if the financing market is there, maybe you can sell it for more. If it's not, maybe for less. But it's throughout your holding period, it isn't always as clear what those companies are worth. And it's very different for public markets because it's very clear what they're worth because there's a price, at the end of each day. And I really like the transparency of that. You can say, I think this is worth X or Y and pitch a stock to someone, or, we also have these alpha capture systems where we put in stock ideas for some of our clients, and then you can see whether you're right or wrong. But in any case, I've said a lot, happy to take some questions. But basically it's, I think finance is a super fun and rewarding field, but there's lots of different, parts of it. So hopefully that's a little helpful. Any questions?
Yeah, so Vielcka, we're going to open it up to the students to ask their questions. I have a couple of students. The first one is Isabella has a question. Isabella comes to us from Colombia.
Hi. So first of all, thank you so much for sharing a little bit about your story today. I thought it was really interesting, and especially your background coming from immigrant parents from Ecuador and then from India, if I remember correctly. So my question today, it revolves a little bit about your outside experiences. I know that you mentioned at the beginning that you didn't really know what to study. So you went for international relations, and then you didn't know whether you wanted to be a lawyer or you wanted to take a different route. So what I want to ask is, how do your experiences outside of private equity end up contributing to your journey in private equity? And how do these kind of shape your investment approach and how you look at stocks?
So I don't do private equity now. I did it probably for like 4 years of my career and focused on public equity markets now. But I guess what I'll say is that, sorry, I'm not sure I fully understood the question.
Yeah, of course. What I'm asking is, like, how do you think your outside experiences contributed to your ultimate career choice and your approach to that ultimate career choice?
I think that having a passion for learning is really the most important thing, or certainly it's been for me. The nice part about finance is I think that you're learning all the time. You can also have a sector focus that, if you have something outside of work sometimes that you like, you can focus on that. I mean, and I think earlier in careers, folks need to decide whether they want to be specialists or generalists. And I think it varies. I mean, if you have a really strong passion for something, you can be, if you're interested in renewables or, ESG, then you can focus on that. And then that can be something that you start off your career and then maybe broaden or not. But I think that starting off as it depends on the person. I think sometimes it's good to be a generalist because you don't want to be pegged as one thing and you want to learn a lot about different things. But I think that it really depends, on the person. For me, I was, for instance, interested in when I started off at JP Morgan, it happened to be the team that sometimes you're interested in one thing. I wanted to do Latin America. I couldn't get a spot on the LATAM team initially. So I was in, the energy team because they needed someone. And so sometimes you don't really get to pick. And then a spot opened up a year later, right? And I was very interested in Latin America, given my background. And then I got to, do a year's worth of LATAM, real estate banking, do LATAM private equity. And now, that's what I focus on. But I think you have to be flexible because it isn't always just because you're interested in that, there might not be an opportunity, but I think you need to just be open-minded because you can probably pivot to what you want later. So I hope that's helpful.
Yeah, thank you.
Excellent. I do have another question from Christiana. If you have a question for Ms. Vielcka, please type it in the chat and we'll try to get to as many questions as possible. Christiana, go ahead.
Do you have any suggestions for high schoolers like us who want to learn more about the industry and also keep up with the trends? Like any resources for learning or any ways to incorporate learning into your daily life?
Yeah, I mean, I think that I'm sure you've heard this before, but I think reading the Wall Street Journal is really important and keeping abreast of, what's driving markets, which companies are ones that are driving markets and leading, you can see which ones are growing or not, and I'm trying to understand what's driving those dynamics. I think that's important. And this is kind of a funny story, but my husband was an architect for a long time, didn't do anything related to investing or finance. And then in the last, I think, year and a half, he pivoted to do real estate development, but took a class on REITs. And since then he signed up for like Seeking Alpha. It's amazing, this website. He sometimes knows so much more and a lot of interesting things. He's keeping, a much just abreast of a lot of things that, I wouldn't have with someone that doesn't have a Bloomberg account and, just, it's just impressive, this website. I'm not signed up for it. I probably should ask for his login, but I think that one I would say and the Wall Street Journal are good ways to keep abreast of what's driving things, which I think over time you'll get asked for your views and you don't always have to agree what's in these articles, right? But I think it's good to read those.
Thank you so much.
Sure.
Great. Sriman, you have a question.
Hi, I'm Freeman. So I have a question regarding your investment banking background when you were when you first started out JP Morgan. What was that was it a top tier school like an Ivy League that you went right after investment banking? When did you go to like an Ivy League? Was the investment
Undergrad?
banking? Yeah,
Yeah,
was
so Wellesley College is not an Ivy League school, but I think what they end up recruiting at a lot of different types of schools, and basically what they're looking for is people that are smart and can think and analyze problems, and that's it. I mean, I don't know that I will say there was a high proportion of students or kids in the training program with me that did go to Ivy League schools, but I wouldn't say it was it was maybe like 50%, that's a long time ago. I'm sure that's all changed, some, but I think that basically what ends up happening is that people at these banks end up wanting to go recruit from where they went to school. And so
Okay.
you end up, so it happens that way, but that, there's also, but one thing that I think is really important when you're in college is to write to alums and ask for informational interviews, and find alums that are at schools and at companies and in industries that are of interest to you. And then over time, sometimes you can get a job, an internship outside of the general process. So not to say that you need to, but sometimes I had a friend who was at Yale in business school, and Yale was not one of the schools that Bank of America recruited at. So that's an Ivy League, but there weren't a lot of Yaleys. I think their business school is newer. So there's not a lot of Yaleys, weren't at a lot at Bank of America. So he sent me his resume. He was a good friend. I sent it to the recruiter, and he worked there for 10 years. So I think it's about networking, really. And, they teach you to do that in business school and maybe less so in undergrad, but networking is a really important way to find a job and, learn more and more about, whether and what is the right career for you, whether,
Do,
what you think is right for you is, and which firm even within that industry is the right firm for you, because every firm has a different culture.
do you think going investment banking at first was like a good decision? Like when you're looking back at it, or like something
um
else probably a hot thing back
I
then,
think
or
it was a good decision, but I would say that if I had it to do again, I feel like in equity research is, if you think you want to be sure, um equity research is also a really great place to start. So, I mean, either is good, but and both open up tons of opportunities and doors, because if you work at an investment bank, um, many companies think it's like a stamp of approval. You can work hard, you can deliver, you're a smart person. And so if you can do that successfully, kind of people say the world is your oyster after that. And I think you'll find, most people on Wall Street started off doing investment banking or it's not true research or some trading or something, but probably more the first two.
thanks.
Sure.
All right, Vielcka, it looks like we have one more question from Mahant.
Yeah. First of all, thank you for coming. I just had a quick question. I was just wondering, like, how does like the Latin American market, because I know you're involved in that a lot, like how do you think it differs from like maybe the North American market, and like, some specific benefits or drawbacks or any like opportunities that you had in that industry? And also I was wondering, like, as aspiring, financial professionals here, like, is it something that you would encourage for us to do, like, get involved with like in foreign market, such as like maybe like Asia or something like that, or is it better just to, stay in North America?
Listen, I think that what's exciting about markets, international markets, is that there's more asymmetry of information, right? I mean, if a stock is covered by 50 analysts, the likelihood that there's going to be, something that the market doesn't know is low. And, at some stocks in Brazil or Mexico are covered by fewer analysts. And so there's more, let's face it, that's what drives, opportunity. There's an information asymmetry. Maybe a story is not understood well, right? And you can actually do that work and figure it out and have a different opinion. The likelihood of that being the case with such a well-covered market as the US is just lower. Not to say you can't have amazing returns and do well by just investing in the US. Plenty of people do it, and that's possible. But I think, international markets are really fun. Maybe, of course, I see it that way given my background, and my experiences, but I think they're a lot of fun. India's been a very hot market, as I'm sure James and Sara can tell you about. They're invested there, and it seems like it's continuing to grow. Now the fourth largest market in the world. So yeah, I think you should just don't limit yourself, right? I mean, just because you're interested in Nvidia, that's ripping today, and over the last year and more, doesn't mean you can't look at more than one market, right? You can find an opportunity in multiple markets. So I wouldn't limit myself. So hope that's helpful.
All right, Vielcka, it looks like we have one more question, and this one is tying into continuing learning. So what would you say about the advancements in AI technology and how they'll impact the new skills and knowledge finance professionals will need in the future?
Yeah, I mean, it is, I think that it's going to help financial professionals do some parts of their job faster. Like you can use Chat GPT to like wordsmith something, that might have taken you an extra 15 minutes. You can just, after you've written it, you pop it in there, and then it sounds just, a little bit better, and you're like, okay, great, done. It's, so I think that I think it's going to help financial professionals save time. But sometimes it spits out something that doesn't make sense. And, that's why you're there to say, okay, well, this is a good, it doesn't, right? So, but you have to be the screen, right? And, so I think that that's one way. I mean, there's plenty of, it does help you, sort through, I think, and summarize, for instance, I think you can give it like various reports and they can summarize things. So it can help, I think, just shorten the amount of time. That's not to say you're going to just take what it gives you as gospel, but it can, I think, help in that way. So I think you'd be silly to not try to use it, but you need to understand how to, and be thoughtful about that.
Great. Thanks so much, Vielcka. I mean, it was great having you and your insight and being able to just kind of be the face of a female investor for our students. So
Thank you so much for
great
inviting
to
me.
have you.
Thank you, Vielcka. You're amazing. And just to add, Christine, just to add to the Why I Ask Kids, Vielcka will be there in our New York Global Summit in New York. So networking event, stock pitch competition, come out and hopefully you earn a spot and get to compete, because you'll get to meet and network with Vielcka and some other members of Brandesco. But thank you, Vielcka, for all you do.
Of course, absolutely. And thanks, Sarah, so much for making time for us today. We're really happy to have you.
Yes. Thank you, Sarah.
Thank you.
Awesome. So speaking of Sara, Sara is our next guest speaker. Sara Moreno is an emerging markets equity portfolio manager and research analyst covering Latin America, Central and Eastern Europe, and Middle East and Africa, as well as emerging market healthcare. Sara joined Jennison in 2011. Previously, she was with Loomis Sales as a research analyst covering companies in Latin America and emerging Eastern Europe, the Middle East, and Africa. Prior to Loomis Sales, Sara worked as an associate equity research analyst at Citi Global Markets, a research analyst at Goldman Sachs, and an economist at Moody's. She received a BA in economics from Bryn Mawr College and an MBA from the University of Chicago Booth School of Business. She grew up in Ecuador, Nigeria, Trinidad and Tobago, and is a native Spanish speaker. So welcome, Sara.
Thank you so much, Christine, Vielcka, and James, and everybody who's taking time out of their day to listen to me. I think Vielcka said it best. Education is the great equalizer, and any method by which we can learn and grow our minds, it's just a positive. So the fact that you're here taking time out of your life to learn and to learn from others, I mean, that's just, you're way ahead of the pack already. So I am an immigrant to the United States. I was born in Ecuador, but as Christine just mentioned, I grew up abroad. I was privileged, and I definitely saw it as a privilege. And the more I got older, the more I realized what a special life I had growing up in different parts of the world. as my father worked in the oil industry and was posted to different parts of the world to head up different divisions. He worked for one of the oil multinationals, and so it gave me a very different perspective about myself and the world and the opportunities that it offered. So naturally, when it came time to decide where I was going to go to college, the United States was, hands down the best option. And so I came to the United States for college. And I went to a small school, and yay to the Seven Sisters, Wellesley and Bryn Mawr, well represented here today. No rare thing, as is Ecuador, which I'm very proud. You don't really bump into a lot of Ecuadorians in finance or actually in much of the world. So it's really great that there's we're representing very well today. And so I came to the US for college, and I would say, very much echoing Vielcka, I had no idea what I wanted to do. But when I chose the college, I was intentional on two things. An environment that was rigorous, that had the academic rigor that would challenge me, and that would give me a very broad education, that it would expose me to a lot of different things and challenge me. And so I was very thoughtful about that. And I would say one of the things that was special about Bryn Mawr was that academic rigor, the focus on critical thinking, being able to write, be able to express your thoughts cohesively and concisely. At first, you're like, this is hard, but in the long run, that's really what serves you well. And as we're all thinking how AI comes into play, right? I think the humanness, what makes us human, is what's going to help us distinguish ourselves from the machines. And so the critical thinking, the knowing how to relate to others, interpret information, interpret data, is what's going to keep our edge versus the machines. And so I think that broad education was very helpful. The other thing that was interesting is, I would say, when I look back on my life and how I ended up where I did, it kind of started at Bryn Mawr because there was an alum who felt very strongly about fostering and creating financial independence for women. And so she funded and endowed, a investment club. So she gave the school money that the women, the students, could run. And I joined out of sheer curiosity, and I loved it. And I didn't think there was anything else you could do with it. I went back to my economics. I was a major in economics with a minor in international relations and Romance languages, because I love languages and I wanted to work at the UN. I think that was my dream at the time. Then I realized, as an Ecuadorian, they don't have a big delegation at the UN, so that kind of died on the vine very quickly. And I focused on economics. And ironically, when I graduated from Bryn Mawr, I actually was slated to go into finance. I got a job at Bank of America, but unfortunately, I was a foreigner, and the H-1B visas ran out, and I had to start over 2 months before graduation and find another job. It was one of those points in life where you think, wow, my life is over, but actually my life pivoted to a completely different direction. And I look back at that moment of crushing defeat as a moment of opportunity. So what I ended up doing is I looked quickly for a small firm where I could use my economic skills. And I ended up at a small firm, now eventually got bought up by Moody's. But at the time, it was a very small firm, startup, just a bunch of economists. At the time, the internet was taking off. How interesting, I'm dating myself. And you're getting all this data and downloading it and creating greater understanding about how to use data to understand anything from how to price a bond in Puerto Rico to where should JCPenney open their next mall, right? Using basic economic data. So it was a really, really fun job. And it taught me a couple of things. It taught me that you never know in life what will be useful later on. So because of my background and my interest, I was the, nobody else wants to do this economist. Nobody wanted to do Hawaii, but because I did Hawaii, I learned a lot about Japan because the two economies are interrelated. Nobody wanted to do Puerto Rico because, it's a small island, but I thought it was interesting because I got to learn every aspect of an economy and have an opinion about an economy, both from a fixed income and from an equity perspective. And nobody wanted to do, Mexico, Brazil. They were considered backwater. They're talking the early 90s. So, very interesting setup for me to learn. And then on one of the projects that I did, I became very interested in the, what is all this data being used for? And I discovered that it was going into equity research houses to help people invest in JCPenney, and I realized that was way more exciting than what I was doing. So I pivoted and decided to go to business school. And like Vielcka said, I realized after networking that the job I needed to target, because it sort of suited my intellectual curiosity, what I liked. I didn't like my days to be the same. I wanted to continue learning, was to do equity research. So I focused on equity research. And right after business school, I went to Goldman. And I had done all the networking that you can imagine because I wanted to work in LATAM. I wanted to meld my background. But it was the 2003, 2002 dot bubble had just burst. I got back to Goldman and everybody from the LATAM team was gone. So I had to pivot again. And I started covering small cap, mid cap, large cap US banks. And this, again, not the sector I would have wanted, not sexy, not fun, but certainly a core sector that was very helpful to me as I moved on in my career. And so eventually I went back to what I really wanted, which was healthcare. I realized I was a growth investor and I wanted to be in sectors that were growth. And so I started to make sure that I developed a depth within a sort of specialization within healthcare. And so I started in different sectors of healthcare, managed care, PBMs, specialty pharmaceuticals, dermatology, ophthalmology. Again, it wasn't clear to me then, even then, how this would all come together. And then the financial crisis happened and I had to pivot again. And I realized that I wanted to, put my investing chops to work. At that point, I knew what asset management was. And I found a career that could really allow me to meld my background, my personal life, my skill sets. I love to travel. I grew up traveling. I love the regions that I cover. And here was an opportunity to actually cover the regions I grew up in, leverage my skills, financial, and just my expertise. And I joined the team at Loomis that needed a second to help run and start out the emerging market strategy. And so we launched that in 2014. I've been with that team since 2008, since I was hired as an analyst. And what has been really rewarding is seeing everything come together, right? Is that I'm covering Brazil. I covered Brazil's economy back in the 90s, right? Mexico as well. So it all came together. And at the time, I didn't know that, but I never said no to any project. I never said no to learning something new. I always found whatever was given to me could be a learning opportunity. And I think that that attitude meant that I was building a broad and sometimes very deep knowledge base that became useful. So healthcare. When I first started covering emerging markets, healthcare, even to this day, healthcare is the lowest weight sector of the index, but it has such a breadth of opportunity if you know where to look. And that all that years of, the years that of sell side coverage that I done in healthcare came in handy in 2015, for example, when the Chinese healthcare market opened up and, all this investment was pouring into that sector in that country and is now being poured into India. So that specialization, just from my own interest, because I do like reading, clinical data and clinical reports, was very handy and continues to be handy in my job today. So I think the one thing is education is fun, engaging. You're doing it right now. And I think you're taking a big step forward. I mean, I wish I had known about this stuff when I was in high school. I found out about it in college. And even then I didn't do anything with it until after business school, when it kind of clicked in my head about what I wanted to do. And ultimately what I wanted was a career. I didn't want a job. And that's the beauty of the financial services industry, is that there's so many opportunities for you to end up in a career. And the road to get there is, it's multiple. You just saw two ways right now. And there's many, many ways. It's all about how you pull your skill set together. So with that, I'll pause and take questions.
Great, thanks so much, Sarah. The first question comes from Anish.
Hi, Ms. Moreno. Thank you so much for speaking today. And my question was, as an equity researcher, how does your typical week look like? Is it like all meetings and like working with teams, or do you work more by yourself? And is a work-life balance like possible?
I would say initially, to be 100% honest, work-life balance is tough. On the equity research side, you're working under a senior analyst, and you're sort of beholden to the needs of that analyst, but also that analyst is beholden to the needs of the clients. And Vielcka can speak to that. It's you have to serve your client first, and so your days are very long because you have to service the client, but then also you have to actually do the work, right? Do the research work that needs to be done. So the days do tend to be very long. And so it's not ideal from a work-life balance, but you learn so much. It gets easier as you get more senior and you get more control. Now, in terms of your day-to-day, there's no day that looks the same because we're so in whether you're on the buy side or the sell side, you're market facing. So every day, if something's happening in the market that impacts your sector, your company, or the economy, you have to respond to that. Your clients are responding to it, the market's responding to it. So there's a big chunk of your day that has to do with just responding to what's happening. And so what you have to be very critical about how you split your day and split your time. And at first, that's in and of itself a skill that you develop over time to prioritize, know what's important, know what matters to your specific stock or sector, and be able to make decisions quickly to move on to the next thing. And so on any given day, things are very different. But if you look at the totality of a week, to your question, I would say that more than half the time, it's focusing on the things that matter to, in my career right now, the portfolio, right? It's making sure that you know what's happening, why your stocks are going up or down. And then another half of the percent is, and what in my role now is looking for new ideas or marketing the fund. And the other is, just day-to-day, being part of a team, making sure that you're interacting with others. Sometimes ideas come out of, just talking to somebody randomly about what they're doing. They'll mention something and it'll click in your head. So that's a general, but I would say day to day, it's very different. There's no day that looks the same from the prior one.
Thank you.
All right, I have another question from Felix.
Hi. So I know that your journey has gone to a lot of different places, but if there was something that you could do over, what would it be?
It'd be from my career. I would have taken a gap year between high school and college. And that's really the one thing I would change. Even, one could say, oh, I would have loved to get that job at Merrill Lynch, but I think that would have completely altered my life. I think more time to explore. I think when we're young, we're such in a rush to be adults, right? And adulting, honestly, is not all that it's cracked up to be. And I would take an extra year to just explore, just find, there's nothing to lose when you're this young and odd of your youth, to just explore and make a mistake. It gets costlier as you get older. So if there was one thing I could go back and do is just give myself that gap year to go explore a little more.
Actually, I also want to follow up on that. Like if you did have that gap year, what would you have done to explore like the things that you wanted to do?
Yeah. So at the time, I was very, very intrigued about Europe. Europe was the euro was coming into force. I actually did my senior thesis on European monetary conversions. I would have gone and just researched that in continent and, kind of melded again my passion for travel and being immersed in a different culture and learning about, specializing on a specific topic.
Great, thanks so much, Sarah. I do have another question from Isaac.
Yeah, so looking at the fact sheet for your, emerging markets equity at Jennison, it looks like your portfolio is really diverse with holdings in Taiwan Semiconductor, Make My Trip, and XP. So I just had a question: what, overarching investment thesis really ties together these diverse holdings? And could you explain how this investment strategy has, consistently outperformed the MCSI Emerging Markets Index as Jennison has done it over the past few years?
I love the question, Isaac. Thank you for doing the research. So the investment philosophy of my strategy is very agnostic to the benchmark. We, from our academic research, we firmly believe that the MSCI index just misguides investors, right? Passive investing does not work in emerging markets. You have to be active and you have to make a decision about the types of companies and the types of investments you want to make and the type of risk you want to make. You balance all that out. And so why you have such a diverse is that we're growth bias. We're focusing on growth and with a strong secular underpin. So what are we seeing? In TSMC, you're seeing, we can't own NVIDIA, but what are you seeing? A secular trend, the building out of a whole new industry, and it requires picks and shovels. And so that's why you own TSMC, right? We still don't even have the use cases for AI, but we know they're coming. So we're in the picks and shovels world in EM, and EM in Taiwan especially is at the center of this. What's Make My Trip? So as when you think about India, they're the last true pure emerging market left. And so you have a middle class that's still emerging, right? Per capita income is still below 4,000, right? Once it gets, to 6,000, breaks 10,000, you get to a society that starts accessing services, not just goods, right? And that gets really interesting. So what's beautiful about My Trip is an OTA, it's a travel company, but it has a platform, it's digital. And so that means that you have this strong secular underpin as people are moving into the middle class and accessing services. And what's the first thing you're gonna do when you get money? After you've bought maybe your house and maybe your two-wheeler or your car, and you have the clothes you like, you're going to travel. So we think that's a very long secular opportunity. And XP is the formalization of the capital markets in a large economy such as Brazil. As people get more wealth, you've already done your trip, you've started to put some savings, you're going to put some money into the market. And Brazil has the depth and breadth of a market that you can do that. India is just starting in that same vein. So what you're seeing is a very active investment philosophy that believes that if you want to invest in emerging markets, you should be investing in growth. And so we focus on companies with unique best business models that have a strong secular underpin, that have a long duration growth opportunity set.
Thank you so much.
All right, I'm going to open it up to anyone who has a question for Sara. I think we got the ones in the chat.
I did have another question, if possible.
Sure.
I know Sara mentioned her emphasis and passion on healthcare earlier. So what made you decide to focus on emerging markets rather than the global healthcare and health sciences equity?
Yeah, it's more because the strategy, we at Jennison, we have dedicated sector specialists, sector analysts, and healthcare actually is a very complex sector, and you actually need that depth and specialization, and you do need to have some kind of a doctor or scientist handy, especially when you're doing US healthcare. In emerging markets, to Vielcka's point of information asymmetry, you don't quite need that yet. So I'm able to leverage the background that I built up in the past when I was on the sell side doing equity research to be able to do it in emerging markets. But we do it at Jennison. It's very collaborative. So we do it in tandem with the healthcare team. So when we were actively investing in China biotech, for example, I worked in conjunction and in tandem with that team, leveraging their expertise and scientific backgrounds of the different members of that team.
Excellent. All right, Sara, I have one last question from you, or for you, from Isabella.
Hi, Sara. So I do have a question regarding what are the top red flags that you usually see in companies? I know this can vary a lot industry by industry, but I just wanted to hear your thoughts on that.
Yeah, I think when you look at a couple of the red flags, I think one of the key ones is governance. Are they aligned with you, the shareholder, or are they in it for ulterior reasons? I think that's the first thing that you need to start. It says a lot about a management team that sets up 3 different classes of share structures, and it's all tied to family and friends, and they get first dibs, and they have bullet payments to themselves, or they IPO and then they break the lockup as soon as the IPO happens. Like, how management teams behave and how they've structured themselves. It's sort of like your home. How do you keep your home? Is it clean? Is it messy? Right? And so it's simple, but it says a lot about the sustainability of what the company can produce. And then you as a shareholder should be very careful as you're analyzing the company. And then the other red flag is management itself. Do they say what they do and do what they say? So it's having that consistent touch point, and you as an analyst checking on what they say, verifying, looking at execution and consistency. Are they being good stewards of your capital, of the capital, right? If they're making an acquisition, is there a positive return to that acquisition? If they're investing in new plants or in new projects, is there a positive return to that, right? As cost of capital rises, are they able to continue to deliver? If they're not, then that's not going to be a good return over the long term. So I think those are critical. The first one sounds basic, but let me tell you, it gets people, I feel like it gets people all the time, because you fall in love with the story, or you fall in love with somebody who's a very good speaker, charismatic, and makes a lot of big promises. And then when you look under the hood, you know, the company is not structured for the terms to be favorable to you as a shareholder. It's a very good question.
Thank you.
Excellent. All right, well, that concludes our fireside chat. I do want to ask Sara and Vielcka to give us one piece of advice for our students who are looking maybe into a career in finance. If you could give them one word of advice, Sara.
Well, I'm going to do two. The first is just start investing. If this is what you think you want to do, take $100 or 10 pesos, whatever your currency is, and just put it in the market and feel how it does. Just test it for yourself, right? And the second is just be unafraid to learn from wherever you can. There's something to be learned in any and every activity if you put your heart and mind into doing it the best, to the best of your abilities.
Great. Vielcka, one piece of advice for our students. Oh, I'm sorry, you're muted.
Can you hear me now?
Yes.
Okay. I would say that, take advantage of the alums and really, reach out to them, hear their stories, their trajectories, ask questions, and, stay in touch with people. And I just think that, that's really the people part of it is really something that helps you build your career over time, and that's very valuable. I think sometimes people underestimate the value of networks, and I think that, obviously working hard is important, but, cultivating personal relationships and learning from those who have gone before is pretty valuable too. So.
Excellent. Now, James, after hearing from Vielcka and Sara, do you have anything to add for our students?
Yeah, just I hope you were all taking notes tonight. You just got a master class in navigating a career, college, and from Vielcka and Sara, how to analyze a business, how to continue to learn. You guys are so lucky. You just got a master class, and for those that hear this later on YouTube, I hope you were taking notes. This was I'm so grateful for Sara and Vielcka for their insights and knowledge, and I learned a lot, and I'm sure our students got a lot out of it. So thank you.
Yes, thank you so much for being here, Sara and Vielcka. We really appreciate you.
Thanks so much for having us. It was great. The questions were great.
Thank you so much. It was a pleasure.
You're very welcome. Thank you. All right, you guys, this concludes our fireside chat. I hope to see you guys at the next one. Bye, guys.
Great.
Good night.
Bye.
Thanks, everyone.
Thank you.